started. Again, I really apologize for the issues with the timing. They've always been at 9:30. It looks like there was a bit of a snafu. So again, I truly apologize. And we'll get started. Nothing like starting your day off on the wrong foot, right? But we do have a full agenda for you today. And, you know, for those of you that may be joining in late, again, I apologize about the error in the time, and these are always recorded and always available on our website. So my voice is a little bit strained today. I'm kind of getting over a cold, so I apologize again if I'm sounding like I just woke up, but I've been up for a long time, and it's just getting over an illness. So we're going to start today with the SEPs, the special election periods, and effective dates. And by now, hopefully we all know that for a qualifying event, a person has 60 days prior or 60 days after their qualifying event to make application. When you're applying on the FFM, if you want to secure a first of the month of effective date following the qualifying event, you have to get that application in by the 15th. So for instance, say you had a qualifying event on May 5th, and you wanted to make application for 1/1. Well, you need to get that application on the FFM by the 15th to secure a 1/1. Off exchange, they're taking them up to pretty near the end of the month, but prior to that, or on the FFM, you have to do the 15th. Just because you have a qualifying event does not mean that they're going to retro and backdate your coverage to join up with that qualifying event. So you also have to time it that, for instance, we'll go back to our 5/5 qualifying event example. You may actually want to make application by 4/15 for a 5/1 effective date because you don't want them to go without coverage, of course. If you're going to go with the first of the month, then obviously a short-term medical might be a good option to secure coverage from the 5th through the 31st of May using our 5/5 qualifying event example. But I just wanted to let you know that, because first of the month effective dates, that's all that's going to be available. Those are the only effective dates that are available on and off exchange. So you're going to have to really be mindful of the date of the qualifying event and getting those applications in either on the exchange or off the exchange in a timely fashion so that you can secure coverage. In my last week's newsletter, I did include the next bullet point, which is the COBRA special election. The HHS came out with, probably about 2 Fridays ago, came out with information because they felt that people that are currently on COBRA may have really been confused about what they could or couldn't do. So what HHS is allowing is anyone that is currently on COBRA that wants to explore coverage with subsidies or without subsidies on the individual market by voluntarily terminating their COBRA, they can do that. They have that opportunity to do it up until 7/1. The caveat is that the applications have to go through the FFM, and you may actually have to get a health insurance marketplace worker involved because it is kind of a special election period within the special election period. So again, if you have somebody that is currently on COBRA and you want to explore individual coverage for them, you can do that up until 7/1. So again, another opportunity for you to reach out to some of your clients and maybe secure coverage. One of the things going into the next bullet point, the ERISA guidelines, one thing that has really come up recently is the fact that the Department of Labor is ramped up their audits. And what they're doing is going into companies, large, small, all kinds of companies, and doing audits of their summary of plan documents, not to be confused with summary of benefits of coverage. And if an employer does not have the ERISA qualified or the ERISA numbered summary of plan documents for every health and welfare benefit, such as group medical, group vision, group dental, group ancillary products, even if an employer pays for an in-house daycare at their business place, there's a requirement by ERISA that they need to have a summary of plan document that outlines all of these benefits. And because the Department of Labor is ramping up their audits, they're going in looking for COBRA information, and if an employer cannot provide the summary of plan documents, the updated, recent summary of plan documents, then there's a $4,000 fine right off the bat, and then they would have to provide these documents and can go back, I believe, 3 years, and the fine per health benefit or health and welfare benefit is $110 per day per employee per health and welfare benefit. So the fines can be substantial, to say the least. And I'm not trying to scare anyone, but it's definitely something that's come to light in some of the vendors or the partners that we use for TPAs. So we are currently enrolled or licensed with TASC, T-A-S-C, and they are offering an ERISA Edge product, which will basically create these documents. We're going to look at a couple other options, and PrimePay, who we partner with heavily, is also rolling out their ERISA type product in June. So we are working diligently to provide these services for you, but I did want you to be aware of the real threat that's out there for your groups. And again, it's another opportunity for you to go in and talk to your groups and further secure your relationship with that group and almost do a compliance checkup with them. So if you have any additional questions on that, you can certainly give me a call. Again, I'm going to be providing some information in the next few days, few weeks for you to look at and also sell. It is a commissionable product. Another thing, even with the delay of the employer mandate for the groups 50 to 99, the employer mandate and fines were delayed until 2016, and for 100 plus delayed until 2015. But even with those delays, you really do need to visit your groups and start getting those measurement periods in line. And I can tell you that the measurement periods are very confusing. I'm still really trying to get a more full understanding of the requirements for the measurement periods. I do have in my newsletter that's coming out today or tomorrow, I am including a video from Steve Jackson from PrimePay about measurement periods. And hopefully you can take a look at that and really get yourself educated on the measurement periods and what you need to do. Again, another opportunity to reach out to those groups, because the 100+ groups should already be thinking about what their measurement periods are and getting those in line and documented. So again, if you have questions on that, just give me a call. But I encourage you to watch that hour video with Steve Jackson and bring yourself up to speed as well. On to the next bullet point is Highmark and the individual carriers' calendar year plans. As of 2015, all individual health plans are going to be issued and work on a calendar year basis. So I mentioned Highmark here specifically because, one, they've not announced what they're going to do, if anything, with their grandmothering of plans. But an example of what I'm going to be talking about would be somebody that, back on September 1st of 2013 wrote a Highmark Advanced Blue product. So 9/1 of 2013, Highmark, of course, with the underwritten programs, they're allowing them to stay in force until 12/31 of 2014, this year, unless we hear otherwise. But for our example, 9/1 of 2013, they're on a medically underwritten program. They're going to have a deductible reset 9/1 of 2014 because that's their 12-month contractual year renewal. So they'll have a deductible reset in September, and then for 1/1, they're going to, for whatever provision that Highmark allows, they're going to have to almost reset their deductible again in January to have a calendar year plan. Now, how that's going to take place, what that means for you and the requirements of your client in getting those, applications switched for a 1/1 of 2015, I don't know yet, but I wanted to let you know about the calendar year plan years and effective dates. And, for anybody that you're writing right now with a qualifying event, again, they're going to have a short plan year because if you write them, for instance, for a 7/1 effective date this year, they're going to have a deductible reset and a plan reset as of 1/1 of 15. So I wanted you to be mindful of that, just so you have an understanding and can, talk to your client when you're enrolling them about what that really means for their deductibles. And on that line, the FFM recertification, I did receive clarification that yes, indeed, everyone that has done their FFM certification will have to do some sort of recertification for the 2015 selling season. I don't know what that means, what the requirements are, but we will plan on running our certification support sessions again this year. So, again, watch for details, but I don't expect any information on recertification to be out anytime before August, quite frankly. So we had one submitted question, and it's actually here in my bullet point about the individual carriers' calendar year plan, so I wanted to just address that as I did, but I didn't have any other submitted questions. So at this point, I'm going to open up the floor for the questions that were typed in, and we'll go over those. And Raymond says, as small groups receive renewals with age band rating, it has been very common for employers to move to a percentage-based contribution and move away from offering any dollars towards dependents. If an employer ends any contribution towards dependent coverage and makes the coverage from a practical sense unaffordable for the employee, would this be considered a qualifying special election period exception to enroll in lesser costing individual coverage? And Ray, yes. If somebody loses their affordable coverage, that is a qualifying event. I know it sounds a little odd, but I did confirm that with one of our carriers and also the FFM, and yes, indeed, if you are losing affordable coverage, that is a qualifying event. Abby said that I mentioned that if someone purchased a policy for 9/1 of 13 effective date and then they could keep it until 12/31/14, is Highmark not allowing the extensions of grandfathered plans? Abby, at this point, the only thing that we have from Highmark is that all the medically underwritten plans that were written prior to 12/31 of 2013 can stay on the books until 12/31 of 14, but upon their contractual year renewal, they will have a deductible reset. So they have the option at that point to stay on their medically underwritten plan. It's just that their deductible is going to reset, and they can stay on that plan until 12/31 of 14. As far as grandmothering after the 12/31/14 date, we've not heard anything from Highmark about them allowing that at this point. So let's see here. I don't have any more submitted questions. I will, just give a few more seconds since we started kind of at an odd time. But I will allow a few more minutes if anyone has any additional questions. The next webinar will be Thursday, May 22nd at 9:30. So we will get our information changed, but it will be at 9:30 next Thursday as it has been all along. So it looks like the questions are not coming in, and we only had those 2 questions. So again, I apologize for the mix-up in the time, and I really appreciate, once again, all of you joining in. I hope you have a great day. Stay dry because we're expecting a lot of rain, and have a great weekend. Bye-bye.